Happy Monday, everybody. I hope you had a great weekend. Although last week was a holiday shortened week, it was not lacking in news and action, so let's jump right in. Short recap of last week and a preview of what to expect this week in the markets. Today is June 26th, 2023, and this is your Monday market update. Long weekend news was led by more stimulus from the PBOC, China, and we've been discussing that here. The recovery there from the longer than most countries' zero COVID policy is slow to evolve. Without rose-colored glasses, this would be a huge issue. At this point, it's only just an issue. Global growth relies on the recovery from China, regardless of how much we try to move to onshoring. Recall that this is bringing back the global nature of the supply chain to U.S. shores. Regardless of this, the world economy needs China to be on the growth train. So as the Chinese are plowing stimulus into their economy, we'll be watching carefully. Tuesday saw the markets globally, then the U.S. react to the most recent efforts as disappointing. U.S. eco data was sparse, as I warned you about, but housing starts were much stronger than expected, hawkish. And the eyes were a bit on the ECB and the upcoming rate hikes. So as the market's positioned for Powell to talk to Congress, the market's turned around a little bit, working off some of the past week's hangover, probably went a little overboard, somewhat technically stretched. The Dow ended down about 0.75%, the S&P down 0.5%, the NASDAQ only slightly down, just under 0.25%. Eyes will be back on the Supreme Court. Two market-moving cases potentially, one that we've been covering, the student loan forgiveness. More congressional action on that failed recently, but that was no surprise, and nothing more from the Supreme Court. But while the House is still committed to this, recall the White House, is still committed to this. Recall that that this is viewed as a potential drain on consumers, as the 40 million plus student loan holders will start paying those back again come the beginning of September, and that equates to less disposable income, a headwind on the U.S. economy. And other is the other major suit out there is a drug maker suit against the government regarding the policy that has let Medicare negotiate drug prices. New drug prices are up basically 20% annually in the past 15 years, but drug makers are crying foul, and that up to the 60% discounts is going to cost them in profits and maybe even hold back research. This may be on the back pages of the news, but this is huge for their profitability, and this is a large group of stocks. Recall that when Hillary Clinton tried this, something similar to this in the 1990s, it did not bode well. So markets gapped lower on Wednesday as news flows since the close on Tuesday were flowing on the negative side. Earnings from the earnings from FedEx and Winnebago were disappointing. Lower guidance again going forward. Eco data from Europe did not help either. Hot German CPI, then figure in the obscure news of the day that the market is watching. Central Bank of Norway, yes, Norway, raised rates by 50 basis points versus the expected 25. The Swiss National Bank, fresh off their UBS Credit Suisse issues, also raised rates by 25 basis points. Add in the upcoming Bank of England, and overall the rate cutting environment, or even the pause skip team, is getting smaller. All of this weighed on markets, especially the high valuation tech shares that have been on a tear. Powell is more and more like the parent every day. He's consistent. He keeps saying the same thing, the report from the last meeting and the outcome of the votes, yet this market doesn't believe him. He's pretty clear. Market is yet to price in what he's been reporting. Fed head Bostic did reiterate and said that he did not see cuts for most of 2024. More of the higher for longer rhetoric. The markets are still pricing in a soft landing. This is something we're going to watch closely. The jury's still out, but hopeful. We won't know for a bit. Overall, the NASDAQ led things lower, down 1.25%. The Dow was down about 1/3%. The S&P was down about 0.5%. In case overall competition was not interesting enough, in the tech world, there is talk about Musk and Zuckerberg in a cage match. Yes, you'll have to see on this one. You'll have to check this one out yourself. Elon's mom is even weighing on this. In case the world was not crazy enough, maybe we can stick to the FTC cases against Amazon and Google's unfair practices claims against Microsoft. I don't see Pichai and Nadella getting into a cage match on this one. We'll have to see. Thursday did not get started any better than Wednesday. It ended Wednesday ended, as all the focus was on central bank action. As I said, Norway, the Swiss, even the Bank of England, all in on the raise rates wagon. And with the Fed skipping, at least Powell is telling it like it is to Congress, no one's listening there either. Shocker. Powell is being clear as of now. They intend to raise rates again at least twice this year. And the rate cuts that the market was watching for the end of this year, 2023, not even in the picture. In 2024, ideas are fading too. This was the market all morning until someone realized that the wires were missing some of the AI news. Amazon announced a $100 million investment in generative AI center. Amazon stock was up 4%. The others follow suit. The big five tech names, NVIDIA, Microsoft, Amazon, Meta, and Apple, collectively up about 1.33%. The equal weight S&P 500 was down about 0.5%. The full S&P 500 ended the day about 1/3 of 1% lower. The Dow ended flat, and the NASDAQ was up just under 1%. Overall, as AI tries to get back into action, central banks still want all the eyes on them. They're all saying the same thing. Rates will be higher for longer. Inflation's not coming down fast enough, far enough or fast enough. Let's see. Can Powell be clear again? Please. Unlike Greenspan in the past, Powell was pretty clear in front of Congress again. He said, quote, "The Fed fights inflation by slowing the economy through raising rates, which causes tighter financial conditions such as high borrowing costs, lower stock prices, and a strong dollar." Close quote. Note the slower economy and lower stock prices comments. This should be clear what the Fed wants, and we know what they want to do to get there. Will this market price this in? We'll just have to see. Stocks opened lower again on Friday as U.S. eco data was not helping things look better. All of the optimism about a soft landing from last week is fading. By the middle of the day, although home builders were hitting new highs, overall losers over winners were 2-1. And overall, the market ended the week lower. For the day, the Dow was down 2/3 of 1%, S&P down about 3/4 of 1%, and the NASDAQ was down about 1%. For the week, down but not out, as they say. Not out of control. Pretty stable as all things considered. All three major averages broke multi-week winning streaks. The S&P 500 lost about 1.5%, ending 5 consecutive weeks of gains. The NASDAQ dropped 1.5%, snapping an 8-week win streak and posting its worst weekly performance since March. The Dow was down nearly 1.75%. Ending a 3-week positive run. Again, all things considered, where we came from, what the eco data is saying, what the Fed is saying, this kind of market action is what I've been telling you to expect. Most of the year-end targets for the S&P 500 are about where we are right now. So I don't see us staying here, so volatility should be expected. What does this coming week hold? We're entering the final week of June. If you want to know what I really think about that, please tune into the Friday planning videos. Last week of June, last week of the second quarter, last week of the first half of the year. There's a lot left to get done this year. For now, last week is light on. This week is the weeks are light on eco data, but the way that the weekend was, watch for geopolitics. Russia is dealing with internal upheaval, short-lived rebellion. What is next there? We'll have to see. Fun market fact historically, according to the research from the Carson Group, when the S&P 500 is up over 10% in the first half of the year, it's positive on the year 82% of the time, up an average of 7.75%. A lot of that historical facts. We'll just have to see what happens. There's a lot of the underfollowed eco data coming out early this week, but the PCE, that's the favorite inflation measure of the Fed, that's due out on Friday. Also Friday, that University of Michigan survey, consumer sentiment and inflation expectations. It does not look like we'll hear a lot from Fed heads this week, but Powell has a few scheduled chances to tell the story again, and everyone will listen to that. We'll just have to see how hard they'll listen and what they'll do about it. So as usual these days, there's a lot to watch this week. Markets are closed next Tuesday for the Independence Day holiday. I don't know about you, but a day off in the middle of the week is going to be weird. For now, stay nimble as they say. More importantly, stay with the plan, keep an eye on the goals, and let's stay in touch. Please come back Friday for the planning video, and have a great week.